Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So we came in today after yesterday's distribution day with the rally under pressure, more bad news rolling in. And we had some weakness off the open, but it just felt like the market didn't want to break. I know I was trying to short the spiders, and I was trying to short Apple, and I was trying to be short like everyone else. And it basically tired me out, and then I had to go to a few different meetings in the afternoon. Lo and behold, 2 o'clock, beige book came out. Well, not the beige book, I'm sorry, the Fed minutes. I'm having some day with that. And it just showed that the Fed's not ready for QE3, which makes sense to me because, again, the Nasdaq's up 11%, the S&P's up 6-7%. It feels like the media makes it like the world's coming to an end, but the markets are holding in just fine. So who are they to do more QE? But anyway, I know their mandate is for jobs and for the economy, but it really does want to control the stock market. But that's whatever. That's my take on it. So P.S. After that, the market broke. And spiders came down to the level we talked about. I have, I think, the chart on Chartly, 133.30, 133.60. And when we got down there, you had to make a decision. Do we break this ascending channel on the first time we get there? Or is it a good spot to cover some shorts, considering that every time we've hit a level like this, we bounce? So I actually wasn't here for that when that took place, but we bounced off it. Some guys covered, some guys pressed, and if you pressed, you got squeezed at the end of the day. I came back at the end of the day and I actually started shorting, I think, like 134.20s, and it was hard. So anyway, at this point, it still feels like a lot of these charts are more broken than constructive, but again, the market still is following this trend where the last thread where potentially things change, we hold. So if you anticipate that changing, it could be painful. So if you look at the chart of the SPX, you will see we've had 2 macro patterns so far this year. First things first was when we actually broke out. When the market broke out in the first quarter, remember we talked about this wedge type pattern, beginning of the year, new flows. We went from like 1250 all the way as high as 1420. Very nice pattern to hold positions, play breakouts, have a good time, blah blah blah. Then coming into the second quarter, started to see this head and shoulders top pattern. Boom, broke it, came in. Now, we have had like 2 different patterns that I've been following. First was this inverted head and shoulders pattern, right? That's when we broke lower and we created this left shoulder, head, right shoulder, and we met some of the measured move right here, which was the depth of this right shoulder. If you remember that, the 30 handles pow into the prior neckline, sell some. Then we retraced. What was that, to the 61.8% Fibonacci retracement. You remember we take a look here because these patterns seem to be repeating themselves until they change. You had to move from here to here. That 61% retracement came in right there, right back at that 1307, 1309 that held. So that's your 0.618. So now you take that out of the way, and all of a sudden, I think that the pattern has changed more into ascending channel where we're making a series of low, higher low, higher low. We're following this channel in a range-bound summer market, and until that breaks, until this changes, keep playing along. When here I think the oscillator was plus 75, a good area to sell. Here we were oversold and we came into a bounce. Here we talked about the oscillator being plus 75, plus 80, good place to sell. Now we're like a little lower or neutral to the oscillator, not drastically oversold, but good place to at least cover and look at the line here. So with that being said, I guess this is your new point of reference to trade against. The question is, can we hold this area, or do we break it? So for me, I'm out. I'm not going to be in the office the next 2 days. I'm going to be trading from the road. So what I put on, is some puts. I put on some, 133 puts in the spiders. So if we go to the spiders, right here, you draw the same pattern. I put on some 133s that expire next, next Friday, and then I also put on some that expire in August, the 132s. So to me, if we don't take back this 135 area pretty quick, right around here, I do think the higher the probability that this channel that we've been riding all of a sudden changes, because you see it stop halfway and we break it, and then you add when we finally close below 133.38, and then we see 132, then you have this 130, 114, and this is what everyone will be saying, let's retest, this area. But for right now, we are still holding this, and you still have to respect it. And the first time you touch it, typically you get a bounce because we were, at 137.40 only 4 or 5 sessions ago. So until that changes again, you stick with the pattern and try not to anticipate it. Every time I try and anticipate it, I get a little hurt until finally it happens, and I'm typically a few days away. Anyway, with that said, Apple real quickly, yesterday had a not a really potent down day, but enough to take notice, enough to say, okay, we just had a move in Apple from the trend line here to the buy point above 584 or 590. Went as high as this resistance. We talked about this on off the charts, this 618, 620. That's where we topped, and now another point of reference to trade against. I think it's going to get very choppy into earnings. Maybe it tries to hold here. I think that tactically, you had a nice day and a half short. Now it probably tries to range out a little bit here. So this could be your new channel, just say for Apple, where you shouldn't expect much as you go sideways until we get closer to earnings. Amazon was faulty. Finally had a little follow through. Wasn't that easy, but we talked about this ascending channel. This broke yesterday and had a little bit of follow through today as it went below yesterday's low, but also it had a rally first and get rejected. So those of you who are looking to for a sell setup, which Laz usually likes to do, came in to about a third of this big bar, got rejected, and then broke here for a move to put a doji in. So now here's another point of reference. Not that easy. Google's been under pressure ever since getting rejected again at the 200-day. Stock remains under pressure. Every rally it has still has been sold. This quarter is going to be very, very important. The last 2 quarters were not very strong, and the street did not take them, didn't give them open arms. And PS, you have a high, a lower high, lower high, lower high, lower high. We've been holding this major support here. So the question is, what happens this quarter? So we'll see what happens when we trade closer. That'll be next week. Some of the, Lulu gave some guys a nice continuation short. We've been talking about how this thing's been broken. Guys who have been leaning on this stock have been making a nice amount of money. It did have another continuation move as it broke below this last wedge type pattern. It didn't give you a blockbuster short, but made you some nice money. Here was that breakout failure, moving lower. Walmart, what'd that do today? Still just trending higher. The buy price strategy was right here, and I know a lot of us aren't in it anymore, but it's still making its way. It's in that target zone. I said 72 to 74 this year. It's halfway through the year and it's already there. Definitely trim some. Target, nice play from Bloomberg. Had this last Wednesday on lunch money. What did we say? We said buy the 57.5s for $1.20, sell the 60s for 20 cents. This option strategy is basically fulfilled. They expire Friday. If you're still there, sell it. You have a double. If you're long the stock, I was long it overnight. I did sell some just because, again, I didn't love the market and I wasn't looking for such swing trades. But PS, it looks really good. If you're in it on a macro level, Target is still making its move higher. It looks really good. Different than some other retailers. Some guys are asking me about JP Morgan. Banks were strong all day. Not a blockbuster strength, but banks put a low in like 3 days ago, just inching up back into resistance. It'll probably be right around here going into Friday's earnings, and who knows. I think the market seems to be doing the opposite of what everyone talks about, and now everyone is basically saying that Jamie Dimon is going to come out and he's going to come clean with the loss, and they're going to have a good quarter. Last time he said that things are fine, and maybe and so people think that this could be the savior here, that the banks will ignite another rally Friday. Maybe it does, but I'm a little bit skeptical. So we'll see what happens there. These still are broken. It's still controlled by this gap from the time the news came out. It still broke this last wedge type pattern, so this is a feeble type bounce, so we'll see what it leads to. Gold is still, I'm just happy I haven't touched it in a few days. Still in this range, still in this chop fest, still not doing much, still controlled by this intermediate downtrend. Biggest guys I know, all they want to do is be long gold. Here's the more macro downtrend, here's the interim downtrend, and here is your major support. To me, I guess it's still consolidating, because if you look at the monthly chart, you'll see it's still in this huge uptrend, decade long, but it's getting very testy here. This 148.50 is huge. Granted, in the scheme of things, it's just a small pull-in within a multi-year rally, but we trade on small time frames. So here is your macro downtrend, here's your intermediate downtrend, and here's your macro support. So still in this noisy area where I really don't think it's worth your time. It's too damn choppy. I would wait. Oil had a better move. If you look at the chart of the USO, which I don't like to look at here, I don't know if I have the analytics for it here, but on my EC than I have for regular oil. Here was a sharp move off the lows. It's now holding higher. USO, so it's showing some commitment to this move. Broke this multi month downtrend, holding in here. So oil still looks like it's acting better than gold. The OAHs, we drew this line also. It's been a laggard group, finally made a low, had a strong move through this downtrend, holding sideways. So this is still in the game as a lower level new sector rotation play for the third quarter, somewhat like the ags. Let's see what they bounced first, but they're getting a little choppy now that most of this crop report news and the corn going nuts is out of the way. But you can see that you are getting a bit tight here. It's had a big move. I'm not sold either way here, so I'm just going to avoid. And there you have it. It's summer trading. Some guys are getting in trouble by over trading. Some guys are getting in trouble by getting too excited at the highs, the same way they're pressing into support. And during summer trading, unfortunately, there are rules where you have to be range bound. You almost have to buy them when they look horrible and sell them when they look great, and not look for momentum. And these are all things that we don't like to do as intermediate trend traders. We like to buy high, sell higher. That's what I love to do. I love to hold 8, 12 positions, massage them in a tier 1, add to tier 2, tier 3 when they're tight and they break out. That's not happening. So right now we have to take what we can get and just take some trades, both long, both short. When the oscillator's plus 70 to 80, look to get short. When it's minus 70 to 80, look to get long. Within those time frames, look for the weakest stocks when you're ready to short, to lean on them. They'll go down the fastest. Same way when we're ready to bounce, look at the stocks that held up the best. That's how you create alpha for your own portfolio. But make sure when you're in the noisy spot where you're in the middle of a range, don't overtrade, don't give money back, don't put yourself in a compromised position, because it'll get you nowhere. Just frustrated for when the real trade does develop. And we're coming into the second week of July. We have a lot of summer left, a lot of trading left. This is the time to enjoy yourself, get outside, swim, bike, run, enjoy your family, play some softball, do whatever it is to make you happy, because summer's done very quick, and then you're like, where did it go? So don't be that guy. So if you're not seeing it right now and you're getting a little frustrated, do a little less, string some green days together, and make sure to take some time off and recharge your batteries. Scott Rella, T3 Live, the recap. I won't see you tomorrow. Evan will be doing the morning call. Laz and who's Evan? Evan Lazarus will be also doing conversations on StockTwits with a guest appearance from Sperling, who is unbelievable. He's the trading captain on our floor, so it'll be good for you guys to get some extra time from him. And then Friday's the relaxed morning call, and I'll see you guys back on Monday. I'll be on the road, but I will be writing some blog posts, looking at the market. I'm not going on vacation, so I just won't be here to be as involved as normal. So tune in to Mike Lee, LeVay, Rob Smith, Sperling, Laz, all those guys, for the color on the radio if you're a VTF subscriber, and I'll be back. Have a great night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com and one of the traders in the active mentor room for T3 Trading Group. What I'd like to do today is I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at T3Live.com or be an existing member of T3Live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th here in New York City.